is Alex Gordienko. I'm responsible for export at Celsa Group, Spain. Today we will be talking about steel long products market in 2021. We'll start with macroeconomics. Let's start with GDP outlook. Global economy is performing better than was expected in April. In April, we expected 5.1% growth overall in the world economy, but now it's estimated to be at 5.6%. This 0.5% additional increase comes mainly from the USA, where the economy is performing much better than expected. Emerging economies continue suffering from COVID impact. Even though we expect that they're going to grow as well, the growth will not be uniform and it will not be as fast as developed economies. Assuming no more COVID waves, the economy is expected to continue growth in 2022 as well. If we look at the per country details, we can see that the earlier and the high rate of vaccinations, they have allowed developed countries a quick V-shaped recovery. All the countries in Euro area, European Union, United States, United Kingdom, Canada, they're going to show a very sharp and very fast recovery this year. Emerging countries were also growing fast, but the rates of recovery are not as high because vaccination rates are not as high and not as uniform as in the developed countries. Also, recently, a new threat emerged to the global GDP, and this is energy crisis. We're going to speak about it a little bit later. Okay, let's move to the construction sector overview. Unfortunately, it's very difficult to find information about the world construction, so we only managed to find information about the European Union. Look, in general, the construction proved to be more resilient to pandemic and logistic shock than manufacturing. Overall, impact of COVID in 2020 has been revised from -8% to only -5% in Europe. So all the countries continue building even within the restrictions of COVID. In 2021, the growth is expected to be around 11%. It's a wonderful growth, even though from a low base, and hopefully it will put construction performance over the pre-COVID level. If we look at detail at per country performance, you can see all countries in Europe are building very quickly. The only noticeable exception is Germany, and this is because the economy depends quite heavy on the export of machinery, which have not been going as well as economies of other countries in Europe. So let's move to the steel industry overview. In 2021, the global steel output is expected to increase by 2.7%. As you can see, this increase in the steel production will be outweighed by the increase in steel demand. We expect steel demand to grow by 5.8% in 2021 to reach 1,874,000,000 tons, after declining by 2.6% in 2020. Demand grew much faster than production, and it seems it will continue growing in 2021. and this pushed up all the steel prices this year. Here, a little bit of information on China, which is a major importer and exporter of steel products. So China in 2020 imported about 17 million tons of semi-finished products, which really helped the world steel mills and customers to maintain reasonable price levels. This year, it looks likely that they will be importing about 14 to 15 million tons. Main suppliers are Vietnam and Indonesia, each with 3.5 million tons of semi-finished products. And then they're followed by Russia, India, Malaysia, and Iran, each with 1.5, 1.7 million tons. Now, let's move to long product consumption. So the final consumption in 2020 have been revised up by approximately 3%. And in 2021, we expect that the growth of approximately 6.8%. So we expect the consumption to grow to 976 million tons. Strong manufacturing activities in the beginning of the year pushed consumption in the wire rods, and that was the main reason for the strong beginning of the year. Recent bottlenecks in the component supplies, increased freights and energy hikes, they undermine the continuing recovery. Now we're going to have a look at the long product consumption by product. We can say that consumption of all long products are going to increase on average about 6.8% in comparison 2021 to 2020. Wire rod is going to increase by about 3.9%, rebar 6.4%, merchant bars 10%, and section 9.7%. The increases have not been even. During the year, first wire rods, consumption of wire rods increased, and demand for wire rods have been very strong in the beginning of the year. The wire rods pulled up the prices and the consumption of all other products. Now, the supply side of wire rods has caught up with the demand. But because of the infrastructure spending and residential construction and all kinds of other construction, other products are catching up. For example, demand now is very high for sections and merchant bars. So let's move to our main product, which is rebar. So if we have a look at the rebar consumption this year, we expect it to reach about 443 million tons, which is the highest number ever. This consumption is increasing everywhere, but the main growth is expected to come from the emerging markets, reverting to the healthy growth after the COVID restrictions and lockdowns in 2021. This is a good illustration, visual illustration of the consumption of rebars. The main effect this year, in order to visualize the rebar consumption geographically, the share of Asian countries are going to decrease slightly from 70 to 64%. And the main reason is because let's say, starting from the summer of 2021, because of the new waves of COVID, there have been some restrictions and lockdowns in Southeast Asia, and that's going to decrease consumption of rebar in Asia. Okay, so 2021 was a very unusual year. Let's have a look at the international market price situation. So prices in 2021 reached historical heights, not seen before. But later in the year, prices came under pressure from expensive freights and logistic restrictions. New COVID restrictions and lockdowns have been implemented with the countries not affected before. As a result, the market has lost its steam. the fear of slowdown in China also have put the brakes on the market in September. Now, situation seems to be reversing again, and the mills are increasing prices everywhere. Let's see what happens in the next couple of months. So this is a very good visual illustration of the mill's margins. And again, it's been a very unusual year. Post-COVID recovery, pent-up demand for steel allowed mills to increase the margins in 2021. But then, again, with new COVID restrictions, very high freights, they've put the margin down. Now, we have an unprecedented energy prices, which are threatening the margins of the mills, and they're pushing all the margins into red again. This is an illustration of the situation with energy prices. They are not the same everywhere, so this information is for the European mills, which have been affected very, very heavily. So impact from the energy price increases in Europe have been estimated to be around 120 to 130 euros per ton. This is an incredible number, which I don't remember seeing anything like that before. Also, there's going to be a second tier effect. This is indirect effect on input costs, prices of ferroalloys, lime, and other input costs. In addition, with extra freight, that's going to put an extra on the costs of the mills. And to sum up a little bit what is going on at the moment, uneven levels of vaccination and recovery after the pandemic have created COVID economic inequality. Some countries recovered quickly, and the consumption in Europe, USA, and UK have recovered quickly and even exceeded 2019 levels. At the same time, this fast recovery and COVID restrictions have created ripple effects on the economy. Firstly, transportation. In 2021, the increase in international trade and COVID restrictions in some ports have put a huge strain on international trade. Freights have increased manifold. Some container freights have increased more than 10 times per ton. And even more importantly, they have created the uncertainty which slowed down international trade. Many countries and companies reliant on the import of components and input materials are left without supply. Next is energy. You have seen the effect of the energy prices on the European mills. Global energy networks seem to be working very well a year ago. However, as recovery has been stronger and more rapid than anticipated, the supply of coal and natural gas has not been able to meet demand. This has resulted in unprecedented energy increases in the countries dependent on the import of coal and gas. With shipping disrupted, it is difficult to expect a quick resolution of this issue. Well, most probably we will see consistently high energy prices throughout this winter. Recently, we've all been scared by the construction situation in China. The Chinese government decided this year to curb excess borrowing, which has resulted in financial issues for some property developing companies, the most famous out of all of them being Evergrande. In September, China registered a trade surplus of $66.8 billion. This is one of the highest surpluses ever. Export is going very strong in China, but domestically, they're not doing so well. Property prices have gone down last 3 months in a row, and the household income share and GDP is falling. Eventually, government will have to rebalance the economy and to implement a new infrastructure investment to supplement the domestic economy. They're already talking about that. Also, on the bright side, it looks like the USA will be finally implementing their infrastructure program as well. This will create a serious boost of demand in 2022. So now we would like to talk about this unprecedented economic situation. What we have now is a lot of money that people saved during the pandemic. Now people want to convert this money into durable goods and dwellings. On top, there is also new infrastructure spending by the government. On the supply side, we have trade delays, high transport, higher energy, and higher input costs. Supply cannot keep up with the demand. This is pretty much unprecedented in history. Not surprisingly, we have had to learn so many new expressions this year. Super commodity cycle, transitionary inflation, supply chain disruption, shortage porn, monster congestion, and the most recent one, bottleneck recession. From our Chinese friends, we learned about 3 red lines and common prosperity. The current economic situation is very new and unusual, but it opens up many new opportunities for the steel industry. It is possible that we will have to learn many more new phrases next year, but as long as the margins stay at reasonable levels, I, for one, do not mind improving my vocabulary. Thank you very much for your attention.